And good evening or good morning to you, depending on where you are in the world. We are here for another hour on Wednesday morning, New York time, 8 a.m. Eastern. I'll just quickly do the disclosures. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Yeah, good morning to you, Marius, as well. Good morning. Right, we will quickly flick through what we're doing again. Same format as recently. Education ideas, ETH setups. I'm going to actually just look back live on that one so that I am not doing any kind of preparation in advance to show you what I saw. I have been out and about doing a few other things today, Australian time. So that is really just my eyes seeing it at the same time as your eyes. You may have traded it. We'll do some live order flow and we'll do some prep context for today. Let's check that the streaming is working okay. Yeah, that's fine. So you've got ES live there. Firstly, I just wanted to say that I have done something different in the bookmap setup for today, especially, and there's a reason why. Okay, if I click across to the bookmap web page with the pricing, okay, I'm aware that there are going to be people here that are on a budget. They've got a strict budget that they adhere to for all their trading requirements. And so they may not either be willing at this stage or not interested at this stage in all the additional add-ons, bells, whistles, you name it, that are in some of the Bookmap editions and add-ons. So, for example, this global pricing, which is 49 per month unless you go yearly, then it drops down to 39 per month or lifetime 990. When I first started using Bookmap in 2014, I believe it was, when it first launched, I got that global lifetime license. So I paid for it with the price at that time. There's an inflation element, so it goes up year upon year. But that is something, I was using basic Bookmap for years and years, and you can spend your time another time offline just looking through all the features and the comparison set between the global and the global plus, and I'll just get rid of that web page. But what I wanted to do for this webinar was just put ourselves in the eyes of somebody that is just subscribing for Bookmap Global, i.e. the basic package that covers futures like ES and NQ, and not necessarily have all these extra features thrown in, sort of to see how it adds value or if it adds value to what they are doing, whether they're doing the supply and demand or retesting of key areas like I'm doing, or whether they're doing a completely different form of trading. Okay, so that was my idea. So you can see that in these I've turned them all off. All these add-ons that are available to me, I have turned off. Okay. I have also done what a lot of people seem to do in Bookmap, which is in the volume dots. Even though I've got the minimum volume of 40 in ES and 10 in NQ, I think it's 10 or 5, I can't remember. I put the volume delta on just for this purpose because I know a lot of people trade ES and they prefer the delta. Maybe it's just maybe it looks cleaner for them. So I thought, well, let's just do that for this session. I am not doing this webinar where we do exactly the same thing again and again. I mean, one of the things sorry if the microphone is just in line with my lips again. One of the things that I don't believe in is getting into a regime which doesn't benefit your market trading. What do I mean by that? I mean that the market, even though they play the same games often, they may even do the same game on two successive days. They love to vary up those games, and so you have to be adaptable regardless of whether you trade just in ETH or just in RTH or both. You have to be adaptable to adapt to the overall market conditions, the context, and also the type of liquidity games that we are going to see in Bookmap, which will not necessarily be the same day after day after day. Okay, with that said, let me reiterate as well that I do answer questions or comments that appear in either the Bookmap Moby ETH Futures channel or in the YouTube channel. And good morning, Tepesh. I can see you're there. Got that on very small font so I can actually get the whole of the YouTube page in, but I can see it and it is working okay. So let us, let the market do what it's doing, and let's get some context as to what may be coming up. So we'll just switch over to, come on, the slideshow and just move across. So the first thing is a quick little look at today's calendar. I was aware, obviously, that coming into this hour that we've got nothing really major in terms of a red category, high priority. We've got orange at 8:30, which is the core durable goods or the durable goods, and you've got crude inventories at 10:30. There was an FOM speaker. Kashkari did speak at 8. It's 8:06 at the moment. I don't know whether he's still speaking, but I can't see any major volatility that suddenly appeared in ES. So maybe it'll happen while he's speaking, but at the moment there is nothing. So just really the only really market making move for our purposes is the 8:30, and it is unlikely there will be major volatility for that one, but there may be. Again, we cannot predict the future. Right, okay, context again. I have not changed these trend lines. This is the ES Daily. These are the trend lines that have been in every webinar for the last few weeks. I've left them on for a purpose. The higher one is the shorter multi-month uptrend, which kicked off in May. The longer one, I can't scroll back because this is a screenshot, but it's longer than May, obviously. And we have now retested it. So, great, we've had a bounce. These trend lines are not predictive. They're just an objective piece of market generated information. The reason why I often use trend lines, and I'll use them just as much on a 10-second chart as I will on a daily chart, is because they can often be a better approximation of where liquidity is or is supporting price than anything else, such as an indicator that people use. Again, I reiterate that I've coded just about every mathematical price-derived indicator that there is out there, and I do not see any edge in any of those. Some of mine that I coded are freely available on TradingView, and feel free to try them out. Yeah, so my point is that we are coming to a trend line where there may be some liquidity that appears. That trend line has confluence with yesterday's settlement, which is denoted as T+1 on this chart. That's ES, and if we move across to NQ, you've broken that, not decisively, but broken it to some extent. That's that lower trend line. So there's a good question. Where's the old pen? Let's drag it on here. So there is a good argument for saying if you're going to start drawing trend lines, there's one there. There's a downtrend in play. Anyway, let's just get rid of that. I've left those on. Maybe next week I will remove those lines and we'll just start afresh. If any of you do ever get into trend lines, one of the beauties about them is that you can just scrub them and just start again. It has absolutely, it's actually a really good habit to get into. Price will do what price does. And if the lines that you had on your screen are not representative of what is happening in terms of price at the moment, then get rid of them. Okay, let us move on. Any questions? Oh yeah, there is a question. Hold on. Let me just move on to the next screen. Not sure why it's not behaving. Epic Pen is interfering with my thing. Anyway, let's read the question. can you please show us the SI indicator and how that can help us for setups? I'm sorry, I can't for this purpose today. If you missed my intro a few minutes ago, there's a reason why I am not putting the SI onto the charts today. I wanted to demonstrate what Bookmap can look like without any of the add-ons and the value that you can have, and also in terms of being able to read the liquidity raw. That's RAW, raw. It's a skill. There is no definitive way of doing it, and it is a skill that you pick up with time through experience and seeing how price interacts with liquidity in terms of structure, in terms of other contexts, such as what the other markets are doing, what key options levels there might be, whether they're moving money through some of the ETFs, who knows. Yeah, the purpose of I'll switch back to it. Sorry, not the right one. Get rid of that, get rid of that. The purpose of having this without the SI here today is to read this liquidity map raw. This is assuming that somebody has come in, they're interested in trying out Bookmap, they've plumped out for $39 or $49 for a month subscription, and they want to see how it can go for them. And I just want to show them its value, or maybe it's not value, it's sort of how it might be used for them in their ETH trading. And we'll also look at RTH if we get the time. So that's why I am not showing the SI in today's webinar. Excuse me, I've been fighting a cold, but keep on going. Yeah, I may well put it back on Fridays, but the idea is we're gonna challenge ourselves to have different ideas about the market in each of these webinars. It's not just to make them interesting, it's also to keep our minds flexible, to keep them malleable. So, today's purpose is we're going to look at microstructure, we're going to look at order flow, we're going to look at liquidity changing in its most raw version in Bookmap, and that's when you zoom right in to the microsecond or the millisecond without any benefit of any indicators reading it. I'm aware that you've got the Bookmap SI, you've got some of the liquidity markers, you've got some of the third-party add-ons that some of the vendors sell, which relate to the icebergs and stops and try and give you an aggregated picture of the stops over a certain position. I'm not talking about the SI one, I'm talking about some of the other third-party vendors. But there is absolutely no harm to stop for a second and look at the action raw and see whether it helps or hinders you in any way. And the only person that can answer that is you. You can answer it subjectively in terms of how you're looking at the market, and objectively perhaps in some of the results. But the results that you have are going to be colored by a lot of different things, not just by how a liquidity heat map looks. Okay, let's get back to the slide. I hope I answered that question. That's why I have not got the SI on. Okay, the ES 15 minutes. The reason why I've got a 15 minutes in ETH is because you have the whole of the previous day's RTH session visible to you. Remember, I have 4 monitors. This is on one of my larger monitors. It's not directly well, it's not actually anywhere near my eyes in terms of line of sight. It's more a peripheral vision thing. But I just like to see what happened in RTH, and you can see it here. And how ETH has related to that purely from a price candle type perspective. And the lines that I tend to have here will be the Globex yesterday low will have a line, the yesterday's high, that's the Globex one will have a line, and yesterday's mid. Yesterday's daily high, in the sense that it was lower than yesterday's Globex high, will not have a line, but it will be marked on the chart. So it is to give perspective, because when we're in ETH, remember, we are not trading a true open market. And what I mean by that, and I've said it before, is that the stocks that underlie the ES and the NQ are not fully open. There is pre-market trading at the beginning of the Asian session, and it appears about an hour into the London session, about 4:15, 4:30, depending on the individual stocks, about that kind of time here. But it's not truly open. The real market activity in terms of volume happens from the 9:30. Okay, make sure we are moving on. NQ, same picture really, and we'll get into the profiles in a second. This is just to provide context on what DAX and the Eurostox did at the London Open, but we'll get to that because I can always drag the trading view chart in. Profiles. Okay, let's look at the profiles. Okay, the interesting thing to note on this ES profile is the range, i.e. good range, the fact that it was pretty skinny, as in well distributed throughout that range, and that we're really smack bang in the middle of it, and that the ETH distribution is quite normal. In other words, it's a bell curve type distribution, so we seem to be in a wide ranging value in ES at the moment in ETH, suggesting two-sided trade. In other words, that if you found good setups to go both long and to short, why wouldn't you take them, as long as they were in accordance with your trading plan? And that is the most fundamental part of this. Okay, and the NQ1. The NQ1 doesn't look as long as the ES did, but one thing to bear in mind when I did these screenshots is that these profiles are not relative. So if I drag in, let's drag in the ES one. Let's just go to the display capture card for a second and drag in. Come on, chart. Let's drag you in. Let's drag that in. And if I go to volume profiles relative. So I've just switched those so that all of these, the width of the volume profile, which is the gray line, the little blocks are time, and the dark gray line along is actual volume. They are now relative to each other. So in other words, when you see this peak here being fatter than the peaks on any of the other profiles, and ignore the ETH because the ETH is going to be much less. The ETH is always shaded grey for me. That is the most important balance or high volume node of all of this range. So that's the only reason why I just dragged that back in for you. And if you go back to individual, they're all sized on their own, so you don't get that same idea, but you get the shape better when you have a look at them individually. Okay. And the stuff here is option stuff that I use that I don't talk about. I'll leave it to my colleague Doug to do Bookmap options webinars. I don't really look at options related stuff in Bookmap. I look at it on other platforms. Okay, let's go back to the image slide. Okay, that's the context for today. There's one other slide that I wanted to come to. Okay, hopefully that's on screen now. I'm just reading some of the comments on the YouTube channel. Just commenting on VIX and SPY. No, I won't be live during the Open. This is just a 1-hour breakfast show. We cover ETH action. I occasionally do the London Open live, but we don't do the RTH Open. There are quite a few presenters in Bookmap land that do live webinars during the actual session. I recommend Tom, for example, and Bruce, obviously. But no, I won't be. Anyway, going back to this, right? I mentioned that I did not have any of those add-ons displayed today, but this is actually related to add-ons, so I'll read it to you anyway. This is in the if you've got access to the beta channels in the Bookmap Discord, you should be able to find this one under beta channels and then Market Pulse, right? So we've got a new person here, Naomi or Noam, and she is working on some enhancements on the Market Pulse add-on, and in particular 3 new algos. Our team has developed several new features that you'll be able to test. 3 new algos, the ability to combine multiple data sources for the same algo. And the point here is that if you go to this channel and you click on any of these 3 emoticons, maybe there'll be 4 by then, but there's currently 3 emoticons, she will then DM you, direct message you, and invite you to join the beta, so you get to try these add-ons. And I cannot stress to you enough that bringing in new ideas for you to think about, or for left field thinking in terms of how other people have developed things such as algos, can actually be beneficial to your trading. There's one thing that I will do when we start doing our visual strategy and drawing in a second, but education is so important to you, and having a closed mind means that you are less likely to adapt to a market as it evolves. So just Just to highlight that that happened this afternoon or morning New York time. So if you want to join, go ahead. It's free to join that beta. I did join. Okay, let's go back to the stream. Okay, and let's go back to Bookmap. There's not an awful lot that's happened in the last few minutes, so we haven't really missed very much. So it might well be time to go back in time. I put in the Bookmap Discord or my Bookmap Discord channel that one of the things I saw was this huge liquidity level here in NQ at 14,716,715. And if we go back to where it came in, it's when there was a low at the Japan Open, and the market's basically been well above there since then. But they've flagged it, they've advertised it as a level that they'd love to trade at again. 150 resting liquidity is a large number in NQ, and it just remains a point of interest. Even though it is an advertisement, I do treat it as market generated information because I am always interested in where these larger players are advertising liquidity. Sadly, in NQ, we're now a good couple of weeks into the December futures contract, and we've still got these heavy algo bands which kind of I don't know, kind of discolor the liquidity picture inside Bookmap for NQ futures. And the reason why they discolor it is because you've got 41 and 60 above, and you've got 70 and 34 below. So basically you've got 40 and 65-ish on both sides. You've got two large liquidity levels which are essentially much bigger than anything else on a thin market, so they will come up as bright orange, and it is incredibly hard to filter those out from the native settings. I mean, even if you're using your own platform, it would be quite hard to write an algo to filter those out. You'd basically have to specifically identify them as one lot and then hide that one lot, but it wouldn't necessarily be easy because you need an ID marker for that each and every day, which would probably change. Okay, so yeah, just so that let's have a look at the London Open. I think some of the action, and I said that I did not trade this, I was out and about. I've got a few things on at the moment, and I will get into that in terms of what does somebody that basically trades full-time do for 24 hours a day. And I do want to discuss that because it's one of those topics which, I don't know, I think there's a lot of misinformation about, especially when you see those ridiculous YouTube videos that go on about people trading for an hour a day and then spending their life at the beach, because I really yeah, get kind of sort of get kind of bored. No, I wouldn't say annoyed, but just bored of seeing those adverts on YouTube time and time again. Okay, let's have a look at the London Open in ES, and let's just bring this back in again, just as background. Okay, what we've said, and I don't think stocks is the best example here, but the DAX is, and the dark green line is its settlement from yesterday, and 3 o'clock 3 a.m. is the London Open. Hey Stephen, welcome aboard. So what I'd like to point out, and this is part of this overnight drift that we discussed the other day, was that markets, for one reason, this is just one of the reasons, that they like to tag home, which is yesterday's settlement. And one of those reasons which that drift paper discussed was there is likely to be inventory imbalance at this level. So that is one of the reasons why they want to tag it. So if we come into the London Open and we've gone on a nice downswing in the DAX, and then you can see they drive straight through the yesterday's settlement and they kept driving it higher. So it's just interesting to note that as we got into the London Open, we were on a downswing and we were well below, and yet we were inside. We were well inside range, or yesterday's range, on ES and NQ that I showed you. You know, if I click across to that one, for ES, just the low in London. If I split that out, you can see the low is still, which is about the 3 a.m., was still well inside this overall value of yesterday's range, suggesting that after 1, 2, 3, 4 really big days down, there was a possibility, maybe even a probability, that we weren't going to have a great big downtrending session in in London. The other thing to note that try to get that one, see if that's exactly the right time. No, it's not. It's probably best to do it over here on this side here, 3 a.m. Yep. Where was that? That was at 4:325. So 4:325, about there. Is that the London Open? Yeah, there. So that's the London Open there. We were, even though we had tagged settlement, not settlement, sorry, where's settlement? Oh no, settlement has not been tagged. Okay, so yeah, you can disregard what I was about to say. I'm talking about any kind of drive towards settlement that has not been tagged yet. That's interesting. Okay, I will. Yeah, well, yeah. The only point from looking at this TPO profile is that we are essentially in a value, or this value here. So if we drew this before we went into the London Open, we'd have this nice value range, which is essentially all the way down. That probably goes there down to about there. A big value area on yesterday's, and so it could be quite possible that we're just going to stay within that large value area rather than continue any major trend exploration down. If you went off and looked at some of these option support levels, you might have found some other reasons why it may not initially explore much further down. Let me get rid of that, and let me get back onto that, and let us just have a look. I just want to have a look because you can see something happening in NQ now, and we've got that liquidity that we mentioned earlier. So that even though we are currently looking at the London Open drive upwards as DAX tagged its settlement and then higher, I'm just curious to see. Okay, since this is something that I have not been showing recently, which is these delta dots, I don't know. I mean, feel free to voice your views or your preferences. Feel free to make comments in any of those channels as to whether you prefer that. So, I mean, on this swing down, I'm talking about the swing. Oh, time to draw. Let's draw. So, hopefully this pen works today because it didn't work the other day. Yep, it is working today. I mean, on this, one of the advantages of the delta may be proven to us here, right? If you look here, all the large dots, maybe I'll go back to the mouse for this one. All the large dots on this big swing down. Remember, we were, or I'll just say this: we were in a little bouncing microstructure here, sort of basically around about there, and we've now broken down out of it. But all the movement down on this swing down, and that's now already out of position, so I'll get rid of it, were large magenta dots, i.e. sell dots, at market sells. So yeah, I'd be interested to know whether people prefer that to the to the volume dot basis, and we should compare them. I mean, since we can compare them, if I get that out of the way, and I turn those into total volume dots. I mean, maybe you do prefer them. Maybe it's clearer that on that push down, I'll be a bit fair at the volume dots because we'll go up to 10. Yeah, maybe it's not as clear in that move down unless you bumped up the volume to 20 that was majorly a bunch of cells bringing that down, and that's interesting because there is a probability theory that if you have a bounce area and the breakdown shows a lot of interested sellers with size, there is a good likelihood of continuation. Um, that's the old Elliott theory, second wave kind of concept. So it's just interesting to see whether people actually prefer seeing that through the delta or the so with a volume filter of 10 now, so every individual trade has got a volume of 10, not delta of 10, and we're just showing the delta bubbles. It's quite clear on if we're looking at the larger trades on this move down, the vast majority of those were sells. And we also have this as an ultimate target here if we are going to get a proper breakdown. Right? The only problem here, that I see if you do use this is if it's going to come back and retest a particular large trade size, it's very hard to see what that is. And here we go. We 8:30. This is the callable goods news, so it's a good thing we are watching it live. It's probably better to watch this in NQ than ES simply because it's not one of the major news releases. I mean, if we flicked across to ES, well, it's breaking down a little bit. And you've got two liquidity levels. You've got that nice one there that's just taken out, although it did not interact. I don't think there's any interaction there. They pulled that liquidity out of the way, and it's often a good sign that they want to go a little bit lower. And NQ, you've got this liquidity. They've now adding quite a bunch of liquidity. And it's interesting as well that these algo bands, which got removed just before the 8:30 news release, have not been put on straight away. It looks like they're just being put on now. But it was a pleasant picture. You can see that there, how clean that is. If we zoom in, how clean that picture is, which is the picture of the September contract and the June contract in comparison with the picture that we've been getting of this December contract with these algo borders. It's horrible. They did that in crude about 2 years ago, kind of ruined the picture or distorted the picture somewhat for quite a few months. I'm just going to go to the YouTube channel and just have a look. Ebert, I'll read your question out. What is the, by the way, we are having quite a good pullback. So we've basically gone straight back to the scene of the crime and gone higher so far in NQ. One of the things that has not changed in any of these webinars is this delta column, so keep an eye on that. If you're looking to trap a player, you're looking at the top to have a really big bank of green, and at the bottom a really big bank of red. And this one basically is all red, bar one level, whereas the top level, it's got two or three, it's got quite a thick red level, so it's potential for that red to be trapped. I'm expecting some games and eventually it to start heading lower, but we are in balance, so choppy behavior is expected. Going back to Ebert's question, what is the best feed to use for a beginner to paper trade futures before going live? There isn't really a feed that I recommend. If you want to use the SI indicator, Ebert, you would have to use Rhythmic because it's the only one that provides the extra data within the data feed to give you the information on the MBO stops and MBO icebergs. So yeah, going back to this delta column, like I was saying, when you want the buys be trapped to get us some fuel to go down, you do not want to see a big fat seller towards the top, which it was very, very close to the top there. That's the last thing you want to see in that delta column because it means that they are more likely to be trapped and you're going to continue higher before any move down. So unfortunately, that's what happened. So our level way below is currently irrelevant. They've, you can see this as well that they've removed most of the liquidity at this 14,730 and this 14,715 to the extent they've advertised it and the fact that it's been there for hours and hours. That could well be an RTH game, and it may be something that is not touched for the next 57 minutes. And you've got these two liquidity levels up above, up at 14,800 round number again, and the one at 14,797, and they're getting a bit closer to that. So we just got chop within a big value range from yesterday at the moment, and you just have to be aware of it, or I'd recommend you're aware of it. Going across to ES, you've got these. Yeah, again, I always recommend zooming out to see how these bands look when they're zoomed out. And this is especially so because we have none of these other add-ons to help us. So you can see here, even before price got into this heavy band of liquidity there, there was a probability that that could be a support level. And in terms of the action that actually happened there, it's a pretty good spring. You've got a nice double bottom there, takes it out, an immediate rejection. And over here on the right, this is what we want to see when we want to see some trap fuel. We want to see a big fat red tail all the way to the bottom. Even better is where it has a lovely little tail, which means it could be something in terms of an auction finishing for quite some time. That's the concept of a strong high and low versus a poor high and low. A poor high and low is where the tail is quite fat. it doesn't taper off, and this one, and a strong one is where it does taper off, and that one you can see tapers off quite substantially. If I was going to widen that column out, not that I want to, because I want to save as much space as possible. Yeah, you get the picture, and you've got this liquidity up here that they're drawing them towards. And yeah, and this is where you having a 3 minute, 1 minute, 5 minute, whatever time period you want can be quite useful. So you can see the structure up above. So you can see this little triangle kind of formation where they broke down. They had like a triple bottom, spring, lovely clean spring, and now they're bouncing, and they're trying to bounce as high as they can, and they've got this liquidity wall up above that may be both a magnetic target and maybe resistance, but we shall see. Maybe resistance in the sense that if it is a choppy day, it could well be resistance, and we could just get back down again and chop and chop and chop. Okay, you have no time for the beach. Yeah, I'm going to get into that. Yeah, I too have my own little drawing, and we are going to draw what on earth somebody does that does intraday trading and maybe swing trading and longer trading as well. But yeah, I'll get into that one. Yeah, it's a good point. The action is a tad slow, but yeah, it's moving along. Let's have a look at NQ. We have not really gone back into the ETH drive, sorry, the London Open drive yet. I really don't like these algo bands. I think they're just horrible in terms of how they distort the heat map. But these two levels up here are the interesting ones in terms of resting liquidity and eventual magnets. You've got these two up here, and then you've got the one at 715 below. So those are the only ones in terms of resting liquidity that you would pay much attention to at this time of the day. Of course, you're free to do whatever you want to do, but just saying that in terms of what I'm looking at on this heat map, those are the only three resting liquidity areas in NQ that are of any interest to me, and these algo boundaries are irrelevant. Okay, yeah, I do have a drawing page where I was going to draw. Oh yeah, I forgot. There is, yeah, in my little ideas section where I haven't really done a 15-minute concentrated session, but I just wanted to, yeah, go through. I like looking at tools which are free to all of you. If you had a free TradingView account, this is still there. Right, so when we've been looking at this heat map here in TradingView, and again I'm only showing it to you because it helps you set out the context in your mind before you start your RTH day or before you start your ETH day or both, depending on what you do. This is a really good way to capture what's been going on, say for the month. For the last week, etc. But there are a couple of new features that they've added, and yeah, you can change it from the S&P to whatever you want, like the Nasdaq or whatever. Anyway, well, let's leave it on S&P. You can always explore that in your own time, and I do stress it's free, so feel free to do it. But in terms of things that are new, yeah, they've got a couple of new features. They've got these three down here, which is relative volume. So yeah, they've tracked the volume of Microsoft, say, for the last whatever it is that they track it against, and yesterday was 1.19. I'm guessing it's against a parameter of 1, so that was significantly above. But it's just interesting to note which of these stocks, because the idea is to see what might be the flavor of the month in terms of this is the thing that is driving the market. For example, if this had existed when Tesla was the flavor of the month day after day after day, and in turn, by consequence, the Nasdaq. But if you were trading Nasdaq futures during that period when it was Tesla, 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 if you had this around, and you could see quite clearly that Tesla's relative volume was high, or its volatility was really high, and you can see where the real volatility was in terms of the stocks yesterday, what was up really high, those two there, Amazon and Google. That would mean that when you were trading a Nasdaq futures, if you had a Tesla chart to hand, that would be the one that you would use in your correlation and confluences, both in pre-market and in RTH. But yeah, I just wanted to show you these new features that you might not be aware of. And remember, you can always drill down, you can change markets, can even go to Australia. If you want to see the natural gas and oil place in the world you'd go there, but I won't drag that up or bore anyone. Okay, get rid of, just going to get rid of that one and and we will draw, but let's just have a look at the market at the same time. I'm aware that we are also a live analysis and commentary hour, so I should not ignore that. I'm also reading a question in the... Okay, yep. Oh, that's a relevant question to what I just have been showing. Yanis, yes, I will answer that question straight away. Yanis is asking, is that session volume profile or chart volume profile used for delta split? I use chart volume profile simply because if you zoom in and out, as it changes to reflect what you're looking at. So, if, for example, we were looking at this little bouncing zone just up here, in fact, have all of that. Now, you would be looking at that there, right? This is before the breakdown in ES, and we saw it was quite a big breakdown. And you'd be looking at the deltas and thinking, hold on a second. Yeah, that's quite a lot of buy delta that is trapped in this micro balance zone. And we've also got some resistance up above. If they manage to get it down below this, and this is before we had that breakout, if they manage to get it down, you can see they're beginning to try, and then they did. The idea is that we could move. There are lots of theories on, how far price can move when it breaks out of balance. I think one of the earliest things I read was like that 200%. So I can draw this in rectangles. Let's draw it in rectangles. So if the micro balance was like that, there's some theory that you would then say that the breakout would be twice as high. So in other words, that would be 1, and that would be 2. Oh, gosh, it's not going in the right area. That would be 2H. Okay, so the idea is that's twice as high as that on the breakdown, as your initial target should that break out of the bounce zone. Again, no harm having these theories. Test them yourself to see how often they do play out. And remember, that's got confluence with auction theory, supply and demand. That's why one of the things, what do I do now that I've known about that for years and years? Do I take that too seriously? No. Do I accept that if we're in bounce area and we go exploring, it can go in a long way? Yes, that's how I play it. So I play it in R multiples, and I also play it in manual trailing off stops. Let me get rid of all of that and get back to the cursor. So yeah, that was actually really, really quite nice. So you've got this little bounce area, it tests right back up to the bounce area after it breaks down. And we're testing almost back into it again. So but we did have a nice breakdown, which was tradable. And that's why, that was a good example of why I find that delta column useful. I find the CVP also useful because it shows you numbers. So if we zoomed in vertically, you get the actual numbers traded in this part of the chart. And it also, you can have a look at these rollovers or these unfinished auctions that I've mentioned in previous sessions by looking down at the extreme of the profile, what has traded down there. And that's quite a large unfinished auction because you can add the two numbers up. In fact, you've traded both the sell and the buy price down there, and that is a large number. But you have to make sure you scroll out the right part of that. Yep. So yeah. So is it likely to come and take that out at some point later? Yes. But does that mean that will happen in the very, very near future? No. Again, nothing is predictive of the immediate future. Nobody knows what's going to happen in the next second or two. Right, yeah, we had more questions than we normally have today, so I've been trying to answer them. Okay, so I've answered Bellion's, I've answered Yanis's. Oh, how is the delta column configured? Okay, Bellion, it's not, is the answer. The answer is it's like a native column within Bookmap. So if we go into configure the column, you'll find that it's just as it is. So are we including both sides? Yes. Are we doing delta only? Yes. And am I doing bars? I'm not doing bars and numbers for the simple reason is I've already got numbers over there. And if you have too many numbers on your chart, you're going to go mad. You can't keep reading them all. There's a reason why I've got the numbers in the CVP, and I've just explained why, because I'm looking at poor highs and lows and strong highs and lows. That's the reason I've got those numbers. And that's the only real reason I've got those numbers. And that's basically it. So it's just, it's a native column, and I'm just choosing the delta option. I've ticked it rather than not ticking it. If I didn't tick it, it would go back to the normal kind of CVP stuff. You tick it, and it becomes delta. It's sort of, you've got to use my opinion is you've got to use every good feature that can help you in a practical sense in your own trading, and I do see that one as we do talk a lot about NQ in this. Maybe this is the time to have a look at when it reached its high earlier, after this big drive up. Let's go back in time, because I have a feeling that this would have been quite useful. It normally is. Yep. Is that the high? 730, no, it's not the high, but that's a local high, so that's this high here, right? And you can see even at this high here, the 730 high, and if you zoom out vertically, okay, you've got one, maybe two little price levels there, but that is a great big block of buy delta at the top. My colleague Tom has got a saying, and I recommend that you memorize the saying: markets go up to go down, markets go down to go up. When they go up to go down, they're going up to collect these buyers as fuel to go down. So you'll see that time and time again. If you've got a platform that can show you this clearly, and by clearly I'm talking here in the shape and the color, color it what colors you want to. You can set those up. If you're not aware of it, you can just set those up in color settings up there. I set this up as green magenta because I just found it easier to see on the heat map than anything else. If you've got something that can really help you and you want to use it in your trigger for your trading, you might be at this great location here. If we look at this 730 high and you drill into it, so I've really zoomed in vertically, and you can see here. If we just use these delta dots, even with this, because I've got a price line here, you can see that's like a one tick failure. So it's a break up below this previous little high and fails, and it fails big. You can see that price action. That's kind of a dramatic. It probably went through 2 or 3 price levels without any trades. It's called a sweep. It swept the book. When you get a vertical price line like that, and even if you zoom it right in, you can see that was a vertical price line. So that is another way of seeing a stop. The SI indicator is great. If you haven't got it, that's still quite good. And that can be a kickstart for a move, which it was in this scenario. But the other thing that helped you with your trigger might have been this big delta profile block at the top. Sorry, I'm just reading Ballion's latest comment. Delta is not an option in CVP or Think or Swim Bookmap. Okay, sorry, I've never used that in Think or Swim. I've used Think or Swim for options stuff, but never looked at the Bookmap stuff. I've always, I've been an owner of a lifetime license for quite a long time, so I've never had to use it in Think or Swim. Anyway, that was just an example of how that delta block, and you can see it went down. So say you managed to get in, and we talk about R's, and let's talk about those R's here. So you've got in, and what we've talked about at this time of the day at the 7:30. Say you get a 6-point stop, so you get in. You might have got in just around about here, and you would never have got in there, but you might have got in around about the 76 level, right? And you'd have had to stop up the 81 level, and you're saying, oh, but I couldn't put my stop behind this, but this is nonsense. This is just algo boundaries. That's not real liquidity. It's just market maker bordering the market. So I really would ignore that. Maybe this is real liquidity, but most of this is rubbish, right? So a 5 or 6 point stop. Why? Because you want a tight stop, because you're going to make more money. And at the end of the day, why are you doing this? To make money. And I harp on about this, but I believe in equal dollar risk bets. So I'm saying that regardless of whether you have a 6-point stop or you have a 20-point stop, the idea is to risk the same dollars. You either do that mechanically, manually, so you multiply, you have a calculator or you have a set of numbers in front of you, so you know how many contracts to put on. That gives you, say you're risking 250 or 125 or $500 each trade. You know that if you've got a 6-point trade, that is the number of contracts to achieve that 250 or $500 risk, right? Um, I hated doing that personally, so what did I do? I programmed something so that when I do that in Sierra, I know if my 1% of my account balance happened to be 250, I know that every time I take a 1R bet, I lose 250. When I say I lose, it means that I have to mentally accept that if I'm wrong and this suddenly shoots up and takes out that 6 points, that is 250 gone, right? And there's nothing I can do about it because I placed a trade there. Oh, sorry, there, the 76 mark. And say, um, let us draw a line. Where are the lines? There. So we're saying that for whatever reason, you have say a stop around about 81, 82 there, and you've got that, and you've got a 6-point thing there. I'll just draw that as an arrowhead so it's clear. And then we have a good drop, right? Straight away. This is literally just under 10 minutes. And you can see from 76 down to 56, you've got 20. So so essentially, that is a 3R, right? And part of the key to that is this. It's this delta block as a trigger, right? You didn't have any great resting liquidity. You did have structure. You had a nice micro bounce. You had a one-tick breakout failure where it broke up, failed to go any higher, and immediately came back down, right? Um, you have to devise your own triggers yourself. I'm just saying that that is one to look at because it's a fuel-based trigger. Okay. And I don't know, you can see these things. I mean, I could do something like that in Sierra, but the way they do it in Bookmap and the fact that you can zoom in and out of this one so well and you can drag this backwards and forwards, I found it to be a very good practical application of seeing trapped players. Let us get rid of all of that. Question. How long have I been using Bookmap? I think I've answered that one already. 2014. I had a lifetime license when I think it basically had a double launch. It had like an initial closed launch, then it had a wider public launch to the world. I was part of the wider one. And they had a special offer for whatever dollar value it was at the time, and I took out the equivalent of a global lifetime license then, which I still have because it's a lifetime license, and they have honored it. Okay, right, any more questions up there? No, not on YouTube. Okay, so a quick reminder. So it turns out, and remember, when we have these resting liquidity levels, they are adverts, right? I do trust them as in the sense that they're market generated information because they're generated by a large player in the market. It does not mean that they will get filled. Quite often, in fact, more often than not, large resting liquidity in NQ will get filled. But this is not the case on this one. It has now been removed. Okay, and they've added something large a little bit lower. It's a big round number, 100. At the 100, I tend to ignore round numbers, so I'm now not overly focused on any liquidity below. I mean, some of this stuff that I haven't zoomed in, but it's just zoomed out, may be of interest, but not much. I mean, that at the moment is more interesting to me, this 76 above. But again, that's only been in there since 8 a.m. since we started, actually. And going across to ES, we're really not doing a lot. We're just chopping in this. You can see that after that break, we had that little area here. It broke down, and we've now got a wider balancing zone. You can see that. So, if I got the old box out again, essentially we are in a really wide bouncing area, and you can see that as well by the shape of the CVP, the chart volume profile over there. It really looks quite balanced. So even though these people were trapped, and to get us the move down, and we saw that previously, sooner or later they may not be trapped anymore. We might be up there and then pushing higher. Who knows? Anyway, yeah, there was one other thing I wanted to talk about, so maybe we should go and do that. We have 6 minutes, so it's really going to be a very quick one. Where? There, come on. It's not letting me do it because I'm not clicking on the cursor. Okay. Right. Okay. I've toyed with this whole question of what is a full-time day trader, and I've toyed with that for a few years, right? I don't think it's something that can really be done in the sense of, let's draw an arrow here and another box. Right. In the sense of 24 hours per day, as in that's all you do. Is that, yeah, my personal view is, uh, hmm, sorry, try again. Okay, and the reason why I don't think that's such a good idea is because, oops, daisy, good, arrow would not leave me alone. I'm still learning that. I love this tool, Excalibur, uh, but yeah. So I mean, I could just go on and on in that box, but there's a reason why I don't think anybody should do this 24 hours a day. And by 24 hours, I'm just extrapolating. I know that none of us are going to be awake 24 hours a day. I'm just talking about, say you sleep 8 hours a day and you might go for a run or whatever, and eat a couple of meals and actually see some people. So that 24 hours may be 10 hours or 12 hours or 14 hours, whatever. Um, I don't think it's a good idea, and I don't think it is healthy. What do I think is an alternative, right? Um, an alternative is, you know, uh, you know, you do some contracting, right? Um, you do plenty of education, and you have a balanced lifestyle. And this means that you do that there, trade in short, focused blocks. Okay. Um, yeah. So yeah, what I found, one of the people that said this was one of my mentors a few years ago, Adam Grimes. Yeah, he has some various part-time gigs and he sells things. So he sells trading courses and books and things, which I don't do. When I say I contract on non-trading stuff, but I don't sell anything in any trading sphere. But I do think it's healthy to do other things. I think there's plenty of people that still work in the office, and I don't see that as a bad thing because it'll bring you different skills and probably a fresh mindset when you go in and you actually trade. I also think there are some people that spend hours and hours and hours reviewing, and I admire them, but I could not do that myself. My reviews are quite a bit shorter than those hours and hours of replay, etc. Um, but I do believe in education every single day of the week and the weekend. Um, but it can be a constant battle to unsubscribe from Substacks, newsletters, Twitter feeds, whatever. In other words, you can drown in stuff and you can end up not reading half of it because there's just too much of it and you can't see any real practical application of it to what you are personally doing. So you'll end up reading a lot, and you'll come across one or two things or one or two people that really add value to what you're doing. And that is the whole purpose of that education from a trading perspective. Um, and yeah, education also encompasses learning other skills. Yeah, but yeah, before I did that, before I did this kind of thing, I could not code to save my life. But these days, I do a lot of coding. Anyway, that was just another thought, and it's a slightly distracting thought, but that was very final snapshot. We'll just see that ES is indeed going up. We're in a choppy bounce, and we're going up to a couple of areas of liquidity above. Good luck to you in all your trading today. I hope that hour was useful in some way or entertaining anyway. Have a good day. I'll stop the YouTube and stop